Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Monday, November 20th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts, take a look at the big picture. We'll work our way into the day itself. I'll start with the weekly bar chart just to backtrack a bit to show you about a month and a half ago, we settled below this descending channel bottom that set up a 1 to 2 month target on the way down at 176.82. 177 and a quarter is actually a downside 5/8. Now, we had been anticipating that until a buy signal about a week ago, actually, above a longer-term speed line at 215.65. So that settlement above the speed line at 215.65, and you can see it on the weekly chart here at 215.07, did set up for recovery into the 260s. This former rising channel bottom, 263.62. There's a channel top on the weekly chart at 269.36. I'm using 268.09, as you can see upper right. This remains our objective following the settlement. I guess it was just a week ago, above the 215.65 descending 1/3 speed line, anticipating this upper area as a 3 to 5 week target, and we're still there. We're a week into it, really, of the 3 to 5 week target, so there's plenty of time to play out. Let's take a look at the upside today. We've got 236.62, which is an upside 3/8 Fibonacci retracement over the last 3 trading days. It can contain intraday buying pressures, and if we push through 236.62 today, I do see a 246.68 as in reach, given the still relatively heightened volatility. Pushing or opening above 236.62. We've got 39 even, 42.35. They're both viable day trade levels, but if you're looking for the trade of the day, if you're a day trader who looks for one trade, that would be a target above 236.62 of 246.68. This is an upside 50% retracement that held last week's highs. That's from the July high against the more recent late October low. 246.68 still able to contain session strength. We could double top here for a day, but if we were to close above 246.68, our targeted resistance in the 263.62 to 68.09 region is then in reach by the end of next week or sooner. And so keep in mind that the upper 260s and dropping gradually remains our 3 to 5 week objective. And if we could close today above 246.68, we're probably just another full week away where we could top out through the rest of the year and into January and fall away again from the upper 260s. And that covers the upside pretty well. Let's take a look at the downside. Where are you? Here we go. 266.60 held last Friday's low. And that is a level that is not only a downside 3/8 Fibonacci over the last 3 weeks, from that late October low to last Wednesday's high, but there's also this pullback high element from early November, so they coincide nicely. Still able to contain session strength, session weakness. And I'll go back to this chart and actually just tell you that if we hold below 236.62 today, which you can see to the far right, you should allow for 226.60 again intraday, where a daily low can be placed. Now, if we break or open today below 226.60, this 215.65 to 216.64 region is likely today. On the way down, 220.39 can give ample intraday containment. So that's well suited, 220.39 for aggressive day traders, but breaking or opening below 226.40. And if you're just looking for the trade of the day, once again, it's 215.65 to 216.44 as an intraday objective below 226.60. This 215.65 level, this longer term speed line we settled above a week ago, in combination with a new rising 2/3 speed line at 216.44, well equipped to contain weekly selling pressures, quite possibly into December trade, and above which, still anticipating the upper 260s as a 3 to 5 week objective. Were we to close below 215.65, then the market pivots south into December trade. I would expect 189.05 by the end of next week, I'd say at the latest. And then longer term, over the next several weeks, 2 to 3 weeks or so, we can fall into the low 280s. The low 180s. 180.16 is the channel bottom on the daily chart that we find at 176.82 on the weekly chart. This is an area that we were at one time anticipating, once again, until we closed above the 215.65 speed line. But if we close back below the 215.65 speed line, we're anticipating it once again. 180.16 dropping daily, able to absorb selling through the rest of the year. And mind you, not only do I have 215.65 down there, but 216.44. This area expected today if we break 226.60. Until then, I think the day trade dynamic is stable. You can bottom pick 226.60. And in fact, if we happen to push above 236.62, that pivots the market upward to 246.68 intraday, where a daily high can be placed. And once again, closing above 246.68 is considered an eventuality. And if today, once again, should by the end of next week or sooner realize our 3 to 5 week objective, which we're a full week into right now, by the end of next week. So this objective could be realized inside of 3 weeks. If we close today above 246.68 by the end of next week or sooner, 268.09 is on the weekly chart once again. 269.36. This upper area able to absorb buying through the rest of the year, possibly well into Q1. We could fall off again from here. And if we were over the coming weeks to close above this 269.36 formation by a full 1% margin, that would indicate meaningful bullish continuation well into the first quarter. I don't have a target ready to show you, but I have an idea already as I'm looking at this chart. So I'm going to leave it at that. What else to say about today? I don't really think there is anything else to say about the day itself. I think this is a good image to leave you with. Please click like, share, subscribe, and check out wickedstocks.com. Get that free trial, that 5-day free trial. You'll see a lot of good stuff. I'll talk to you tomorrow with Tuesday's Tesla. Have a great day.